Are you ready to make 2024 your most profitable year yet? With markets changing faster than ever, knowing where to invest could be the difference between thriving and just surviving. Most people will tell you to buy and hold, that the market always goes up in the long run, and that's true. But what they don't tell you is just how long that long run can be. We saw the S&P 500 take over 10 years to recover from the 2008 crash, and even longer for certain individual stocks. And with whispers of a recession still looming large, playing it safe just isn't going to cut it. That's why in this video, I'm breaking down the top 5 investment strategies you need to stay ahead in 2024. We're diving deep into the trends that are shaping the future of finance, from the rise of AI-driven investing to the unstoppable momentum of sustainable investing. I've spent years analyzing markets, studying trends, and building my own portfolio, and I'm bringing that experience right here, right now, to give you the tools you need to succeed. And trust me, you won't want to miss number 5. It's the future of investing, and it's something I'm incredibly passionate about. Let's dive in. All right, let's kick things off with ETFs, or exchange-traded funds. If you're serious about building long-term wealth, you already know that diversification is key. You don't want to put all your eggs in one basket, right? That's where ETFs come in. They're like these diversified baskets of assets. Think stocks, bonds, real estate, you name it, all bundled together into a single investment. It's like having a little slice of everything, which helps spread out your risk. Think of it like this. Instead of betting on just one horse in a race, you're betting on a whole stable. Some horses might stumble, but others will pull ahead, and you get to benefit from the collective performance. That's the power of diversification, and ETFs make it incredibly easy to achieve. In 2024, with all the uncertainty in the air, diversification is going to be more important than ever. We've got inflation fears, geopolitical tensions, and the aftershocks of the pandemic still playing out. It's a recipe for volatility, and you need a portfolio that can weather the storm. ETFs give you that resilience. They let you invest across different sectors, industries, and even countries with a single purchase. Want exposure to the tech boom, but worried about a bubble? Grab an ETF that tracks the tech sector. Believe in the long-term potential of renewable energy? There's an ETF for that too. It's all about tailoring your investments to your goals and risk tolerance. And the best part? ETFs are incredibly cost-effective. You're not paying high fees to a bunch of Wall Street hotshots to manage your money. Instead, you're getting broad market exposure at a fraction of the cost. It's like investing on autopilot, but in a good way. Remember, investing is a marathon, not a sprint. ETFs are your reliable running shoes, helping you go the distance and reach your financial goals. Next up, we're diving into the world of cryptocurrency. Now, I know what you might be thinking. Crypto? But isn't that risky? Didn't Bitcoin crash? And yeah, you're right, crypto has seen its fair share of ups and downs, but let me tell you something. Crypto is here to stay. I've been following crypto since the early days, and I've seen firsthand how it's evolved from this niche technology to a global phenomenon. We're talking about trillions of dollars flowing through the crypto market. Major institutions like Tesla and Square investing billions. This isn't just some fad, it's a fundamental shift in how we think about money and finance. Now, 2024 is shaping up to be a pivotal year for crypto. We're seeing major players like Bitcoin and Ethereum solidifying their positions as digital gold and the backbone of decentralized finance. But what's even more exciting are the advancements happening in DeFi, or decentralized finance. DeFi is all about creating a more open and accessible financial system, one that's not controlled by banks or governments. We're talking about lending, borrowing, trading, all happening on blockchain networks, with transparency and security built in. And it's attracting massive investment from both individuals and institutions. Now, I'm not saying you need to go all in on crypto, but ignoring it completely would be a huge mistake. It's like ignoring the internet in the late 90s. You don't have to be a tech expert to see the potential, but you do need to be educated. So, how do you dip your toes into the crypto waters? Well, the first step is to do your research. Learn about the different cryptocurrencies out there, understand the technology behind them, and most importantly, invest responsibly. Don't put in more than you can afford to lose, and always be prepared for volatility. By staying informed, investing responsibly, and keeping a long-term perspective, you can position yourself to potentially benefit from the crypto revolution. Now let's talk about something that sounds straight out of science fiction, but is very much a reality today: AI-driven investing. Algorithms can analyze markets, identify trends, and execute trades with a speed and efficiency that humans can only dream of. And it's changing the game of investing as we know it. AI-driven platforms augment our abilities, taking care of the heavy lifting and helping us make more informed decisions. Think of it like a GPS for your portfolio. These platforms leverage machine learning and big data to analyze massive amounts of financial information. And the best part? AI-driven investment platforms are becoming increasingly accessible. Platforms like Betterment and Wealthfront offer AI-powered portfolio management with minimal fees and low account minimums. Remember, AI is a tool, and like any tool, it's only as good as the person using it. But if you're looking to enhance your returns and take advantage of the latest advancements, AI-driven investing is worth exploring. All right, let's talk about something that's been keeping a lot of people up at night. Inflation. Inflation is a fact of life. It's been around since the dawn of currency. But in times like these, when prices seem to be skyrocketing on everything from groceries to gas, it's more important than ever to protect your wealth from its insidious effects. The good news is that there are proven investment strategies that can help you stay ahead of inflation and even come out on top. The key is to invest in assets that tend to hold their value or even appreciate during inflationary periods. Think of it like building an ark before the flood. You want your investments to be on solid ground when the tide of inflation starts to rise. One place to look is commodities. Commodities are raw materials, things like gold, silver, oil, and agricultural products that are essential to the global economy. When the value of the dollar declines, the price of these commodities tends to go up, acting as a natural hedge against inflation. Gold, in particular, has long been considered a safe haven asset during times of economic uncertainty. It's a tangible asset with intrinsic value, and its price tends to move inversely to the dollar. Another asset class that has historically performed well during inflationary periods is real estate. Unlike paper money, which can be printed endlessly, land is a finite resource. And as inflation pushes up the cost of construction materials and labor, the value of existing properties tends to rise as well. Treasury inflation-protected securities, or TIPS, are a type of government bond that's specifically designed to protect your investment from inflation. By diversifying your portfolio with a mix of inflation-resistant assets, you can position yourself to weather the storm of inflation and potentially come out ahead in the long run. The future of investing is sustainable and ESG-focused. You don't have to choose between making money and making a difference. In 2024 and beyond, profitable investments align with a sustainable and equitable future. ESG investing, environmental, social, and governance, is a fundamental shift in investing. Supporting companies committed to sustainability, social responsibility, and strong governance is financially smart. Companies prioritizing sustainability face fewer regulatory hurdles and capitalize on eco-friendly demand. Socially responsible companies attract top talent, build strong brands, and cultivate customer loyalty. Strong governance mitigates risk and ensures ethical practices. ESG investing is no longer niche. It offers competitive returns. Countless ESG-focused funds and ETFs allow you to invest sustainably. The iShares ESG-aware MSCI USA ETF, ticker symbol ESGU, tracks U.S. companies with strong ESG practices. Recognize that investment decisions have real-world consequences and use that power to build a better future. So there you have it, 5 solid investment strategies for 2024. Whether you're just starting out or a seasoned investor, these approaches will help you navigate the challenges of an ever-changing market. Remember, the key to successful investing is to stay informed, diversify your portfolio, and always invest with a long-term perspective. Now, I want to hear from you. Which strategy are you most excited about? Are you ready to dive into the world of ETFs, explore the potential of crypto, or embrace the power of AI-driven investing? Let me know in the comments below, and let's keep the conversation going. And hey, while you're down there, don't forget to hit that subscribe button and ring the notification bell so you never miss an episode filled with valuable insights and actionable advice on building lasting wealth. Until next time, keep investing smart and take control of your financial future.